Joining us now, Ashley Webster, Mike Murphy, Steve Cortez. Hey guys, the market, we start today, record highs. Steve, what's going to stop this market?
You know, Charles, the only thing that will stop it, I believe, is Capitol Hill. I don't think that's going to happen, but I think it's the only way that this stock market can be stopped. There's a lot of momentum in the economy right now. There's a lot of confidence from consumers at the regular working angle all the way up to CEOs in the C-suite. So confidence abounds, optimism abounds. The only thing that could derail it would be Congress not getting tax cuts done and getting them done this year. Now, I don't think that's going to happen. I believe that we will get meaningful tax reform done this year, and then the stock market, I think we've only seen the beginnings of the kind of rally we can see the rest of 2017 and into 2018.
Mike, you mentioned that sort of rough road for tech last week. Is that, though, can we look at that as a yellow flag, as what could happen if things go wrong?
Yes, but I think let's look at what the market's telling us. You saw that sell-off, a couple of downgrades on Apple, like you mentioned, and then you get news out of Amazon, and now money's pouring right back into the techs. So I think, you know, you hear, Charles, you've been doing this long enough, people say 8-year bull market. It has to stop at some point. Valuations are stretched, has to pull back at some point. There's no have-tos in the market. Right now, if you look at what the market is telling you, every dip is being bought. There's confidence out there in the market. Earnings are supporting the market. So I think the next move, next 5 to 10% move in this market is higher, not lower.
Do you agree with Steve? The only thing that could stop it is the GOP falling short of getting through the president's agenda?
Well, I would look at it a little bit differently. I think the market isn't pricing in a tax cut or a health care bill reform. So if you get that, I think that's gravy on top. I think right now the market's treating this as if we don't see it this year.
You know, Ashley, the economy, we know success begets success.
Right.
And we do see great signs that some things are moving without legislative wins.
Yeah, I think the economy is doing well, standing on its own. I think the markets are doing well, standing on its own fundamentals. Finally, the Fed is not propping it all up, which is nice to see. And to Mike's point, yeah, I think we are moving ahead. Maybe not as quickly as we'd like in some sectors of the economy, but overall, I think all the signs are positive. If we do get something out of Washington, yeah, it is gravy, and we'll see the next leg up.
All right, well,
Ashley, you know,
Yeah.
To that point about the Fed, Ashley, which I think is critically important, it's amazing to me and reassuring to me that last week the Fed raised interest rates. Markets didn't seem to care a bit. Markets shrugged it off. That wasn't what happened back in 2015 when the Fed first tried to raise interest rates. It sent global markets into a cataclysm in early 2016. So what a difference, by the way, it makes, I believe, mostly due to President Trump, but also due certainly to earnings expansion. So we have such a different scenario where the Fed can raise rates and can slowly, albeit slowly, move toward normalization. But it's a welcome change. Let's get out of that world of constant Fed support, of constant central planning, relying on government. Let's get back to the dynamism of the economy, of innovation, of corporate earnings, of job growth, and I think all that's happening, and all of that will accelerate when and if we get tax cuts.
Steve, I did not interrupt you because as you were talking, the market was coming back.
All right.